Welcome back to Stock Kong Invest and Analysis, where we look at the market and break down the opportunities.
Alphabet Q4 earnings surprises may not be just about AI. This article was written by RI Research. Summary: Alphabet has emerged as a leading AI beneficiary, highlighted by Gemini 3 and Berkshire Hathaway's significant investment. Google outperformed its Magnificent Seven peers in 2025, delivering nearly 30% total returns since the last coverage. Momentum is expected to continue into 2026, with the upcoming Q4 earnings release serving as a critical catalyst. The investment thesis remains bullish, citing strong recent performance and various growth prospects beyond AI-driven ones. Alphabet Inc., Goog, is probably the biggest AI darling of the last few quarters, particularly after Berkshire Hathaway opened a large position and the release of a groundbreaking Gemini 3 large language model. As a result, Google was the best-performing Magnificent Seven stock of 2025. The momentum remains strong as Google delivered almost 30% total return since my previous coverage before the Q3 2025 earnings release. Just 2 weeks left before Google's Q4 earnings release, and I think that it is a good time to update my investment thesis before this crucial catalyst. I expect Google to continue its solid bull run in 2026 as well, because there are various bullish factors surrounding the company. All these bullish factors significantly increase the probability of rapid multiples contraction, meaning that I reiterate a strong buy rating for this wonderful stock. Reasons to continue buying Goog. Since my previous coverage was published before the previous earnings release, I believe I must cover Q3 earnings at least briefly. It was a confident double beat, with a notably accelerated year-over-year revenue growth, 16% up, compared to 13.8% in Q2. Finally, it was another quarter with notable EPS growth, which was powered by operating leverage, gross margin expansion. For the upcoming quarterly earnings, scheduled for February 4th, revenue growth is expected to retreat slightly, a 15.4% year-over-year growth. However, Wall Street analysts believe that Google's EPS growth will maintain a 20% plus year-over-year growth rate. Analysts are optimistic about Google's ability to deliver robust Q4 earnings, as there have been many more positive earnings revisions recently compared to the number of downgrades. I think that Wall Street's expectations about the headline numbers of Google's Q4 earnings release are reasonable. First and foremost, there is strong growth momentum both for the top line and EPS, which is obvious from the double-digit revenue growth over the last 9 quarters, together with consistent bottom-line growth.
Hey viewers, don't forget to like, subscribe, and add our channel to your favorites. We will continue to provide you with more insightful stock analysis.